fair values. Yeah, to do with ethics, to do with the definition of a sub, to do with disposals, control, with an emphasis on writing. But I think I've got you to a place where you appreciate the fact that words are important, but also group accounts does come up with numbers. On page 42, and I'm not claiming it's a pass examination question, but these are techniques and processes that you will need in order to tackle pass examination questions. Page 42, David, I'm simply going to give you 5 minutes. You should, I hope, be able to have a go. If you're struggling a little bit, look again at what we've done. If you're struggling a little bit, there are pro formas and explanations on page 15, on page 16, on page 17, which you might want to have a perusal of. But I hope through having done the recap, these things are fresh in your mind and you are able to execute the numbers on page 82. So 5 minutes, yeah? Have a little go, do your best, have a little go. Explain and calculate the impact in group accounts of each transaction. David has owned 80% of Cameron for many years. So David is the parent, Cameron is the subsidiary. It's an 80% relationship, 20% NCI. NCI is 10, net assets are 30, and the unimpaired goodwill is 40. What would happen if David transacted with the NCI and buys out all the remaining shares? For the avoidance of any doubt, I have 80, I have control. I buy 20, and therefore I still have control. It was a sub, it's still a sub. All that's happening is the NCI of 20% is totally disappearing. This is a transaction between the parent and the NCI. So it's within group equity, there's no profit, there's no loss, and therefore there is a difference to reserves. There's a difference to equity. Now the cash that is changing hands is 15. Cash in or cash out? Cash out. That is money we are spending. That is effectively a debit. It is in the nature of an investment. We have a reduction in the NCI. Well, no, we don't have a reduction. We have an absolute annihilation of. The whole of the NCI is disappearing. Whatever balance on the NCI that exists goes. So the balance on the NCI is 10,000. And we are, for want of a better way of saying it, buying 20/20ths of the NCI. Therefore, the whole of the NCI disappears. So this would be a reduction in your NCI working. That would be a reduction in your working for. You are left with a difference of 5. Now this difference goes to equity. There are so many different ways of explaining how this difference, whether this difference goes to equity as positive or negative. But one way of thinking about it is just simply whether it makes you feel happy or sad. And when you're looking at this number, you've spent 15 to get rid of a problem of 10. So does that make you feel happy or sad? Sad. You've overspent. You've got a net debit. You've got a net debit left. You've overspent. Assets are going down by 15, so equity has got to go down by 15. This is a negative. This is a debit. This is going to reduce your other components of equity in working 6. That difference goes to equity and is a negative scenario. What you would then have to do in the group account scenario is post. Yeah? You would then have to update your NCI, update your other components of equity. 1 down, 2 to go. David could sell 10% of the shares to a third party, and David will still control Cameron. I have control, but I still have control. I have control at 80, and I have control at 70. It was a sub, it is still a sub. There will be no change to the goodwill. It's a transaction between my parent and my NCI, so it's within group equity. So there will be no group profit or loss because I'm transacting with myself. All that's happening is the NCI is going from 20% to 30%. I'm selling them a slice of the business. So there is an increase in the NCI and there is a difference that comes about. The cash that is moving is 20. Cash in or cash out? Cash in, yeah, that's effectively proceeds. We are selling them a slice. So we're selling them, and as a result, there is an increase in the NCI. We are selling them 10% of the net assets and the full goodwill. We're selling them part of the business. Now, what are the net assets? The net assets are 30. What is the goodwill? The goodwill is 40. 10% of that is 7. Over the course of this weekend, I will say something and then write something down totally different. Over the course of this weekend, I will write down a number. I will say the difference between 20 and 17 is 12. And you will please correct me when I make such a stupid mistake. I don't have a calculator. I've done a week's work, you've done a week's work. So, yeah, I'm sure over the space of a weekend I'll make some just kind of slip of tongue. Please correct me as I do that. Numbers, if I'm going to write down a number, it should be the right number. I know my spelling is not perfect, so don't worry too much about my spelling. You're looking at that 13, and I'm hoping you're thinking whether that 13 makes you feel happy or sad. Does that 30, you've got cash in at 20, you've sold something of 20, for 20, what you've had to sell is a share of your business which is carried at 7. So does that feel good or bad? Good, yeah, it makes you feel happy. Feels like a profit. I mean, this cash in has been debited to the bank account. This cash in is effectively a credit because you've debited cash and this is where you're crediting. So it is a credit balance. It feels like a profit, only I shouldn't call it a profit. Difference to equity, this is positive. And therefore this would be an increase in your other components of equity, an increase in your working 6, and this is an increase in your NCI, this is an increase in your working 4. 2 down. 1 to go. David could sell the whole of the investment in Cameron, or 100. David could sell the whole of the investment in Cameron for 100. Now this to me is very, very different. I have control here, but clearly I don't have control here. So there is a loss of control. There is a disposal. If there is a loss of control and there is a disposal, there will be a group profit or loss arising on that disposal. And that's an important number for you to be able to ascertain. And like so much of group accounts, hopefully you understand it, but there is a pro forma. So with the disposal, we want to know the proceeds. We want to de-recognize all of the net assets. We want to de-recognize all of the unimpaired goodwill. We want to de-recognize all of the NCI, but the NCI is a credit balance. So I have it as a plus. And then we would bring in the residual holding. There doesn't appear to be a residual holding. So you would plus all your, you would plus the fair value of the residual holding, but there is no fair value of the residual. There is no residual holding because you're selling everything. So what are the proceeds? Proceeds are 100. What are the net assets you're losing? 30. What is the goodwill that you're losing? 40. But your NCI is a credit balance, so that comes in at 10. And therefore, hopefully, it's a positive number, 70. So we've got a positive number of 40. So this is our profit on disposal. This is our profit on disposal. Yeah, I mean, there's some other examples there. You know, Monday on page 41, it's got some nice calculations there of a similar ilk. And then there's a past exam question, which I think most of us have done, but, you know, maybe in a week or so's time will be worth doing again. Lovely question called Grange, yeah, on page 43. These things do come up on a regular basis, yeah. So it is something for you to be a master of. I'm going to talk to you for 3 or 4 minutes, and I'm almost going to talk to you as if you are F7 students. So I hope there will be no surprises in anything that I say. When you prepare group accounts, you will be calculating goodwill. It's inevitable that in the exam you will be calculating goodwill. And there are 3 core ingredients in the calculation of goodwill. The controlling interest, parent's investment, the NCI, and then the fair value of the net assets. Now, in respect of the NCI, there's a policy choice as to how you measure the NCI. 2 ways. How can you measure the NCI? Fair value or proportion. If NCI is at fair value, goodwill is in full. If NCI is at fair value, goodwill is in full. If NCI is a proportion of net assets, then goodwill is attributable to the parent only. What must you do every year? Impairment. There must be an impairment review on your positive goodwill. You can never revalue your goodwill, and you can never reverse the impairment loss on your goodwill. But every year you must do an annual impairment review of goodwill. Now, goodwill cannot be tested in isolation, so we have to test goodwill as part of a CGU, as part of a cash generating unit. So we take goodwill and the subsidiaries' assets and liabilities, and that's collectively what we test. And then we allocate any loss to the goodwill. So a cash generating unit, goodwill is impaired when the carrying value exceeds the recoverable amount. So when the carrying value exceeds the recoverable amount, there's an impairment loss. So if your carrying value is 100 and you can only recover 90, your impairment loss is 10. And you must recognise that loss. You must write the asset down. What if you have negative goodwill? What if goodwill is a discount? What if goodwill is a bargain purchase? And instead of having premium positive goodwill asset, you have a negative goodwill bargain. Yeah? What do you do with that? What do you do with negative goodwill? It's a profit. You're better off. You take it directly to profit. I think that's stuff that a lot of you remember from F7, you've seen again at P2, and that's stuff that normally just is in the fight, in the numbers. It's possible he could ask you to explain that, but it's a little bit basic, to be honest. If he does ask you to write about it, and you would say thank you very much. Page 37. Now, you know the theory. I think you know how to calculate goodwill. And I think you know that goodwill is part of a CGU, part of the year-end net assets. And when that exceeds the recoverable amount, there is an impairment loss. And I think most of you will remember there's a bit of a trick sometimes as well. I think I can leave you to have a go at this. Yeah, I think there's an opportunity for you to have a look at page 37 and to calculate the impairment loss. Now, in order to calculate the impairment loss, the first thing you've got to do, actually, of course, is to calculate the goodwill. Yeah, I'd like you to have a go. I'd like you to have a go. This is good stuff.